All right, welcome to the Compounded Guys. And in this episode, within 6 to 7 minutes, we'll try to quickly go over how to buy options on Robinhood and what does it mean. So this is the very basics. So I'm gonna do my best to go through everything, and my friend on the other line, he's gonna ask me questions. Whatever he doesn't understand, he'll question me, and we'll try to go from there. So recently, we saw that AMC. We're talking, January 26th. AMC shot up after hours, and the options for this is probably going to go nuts. So I luckily bought options for this uh, today. I think. Oh, I bought one. Let's see when I bought this one. I bought uh, one yesterday, and luckily it will do very good tomorrow. So how do you check out? So first of all, you have to go to Robinhood and you have to enable options, and that's step one. And so once you have done that, you click on AMC. Now you go over here. You can click trade options, and it's very simple. All you have to do is pick your expiry date, which could be February 29th, this Friday, to whenever, and then you just pick your strike price. Right now, because the options shot up, it was actually $4. It was $5 at market close. And usually, a lot of times, what's the likelihood of stocks going to double or triple by this Friday? Very little.
Very
So
unlikely.
exactly. So very few people make put these calls out there for a $10 call this Friday. So then you just click on what expiry date you want. Let's do this. Let's do February 26th. I'm gonna buy one, and ooh, that gets pricey. And let's do a $6 call. Let's do a $6 call. Let's do a actually. It probably won't even go through because again, if you look at AMC, it doubled after hours. So all these options probably went up by 400-500%. So let's look at this one. Um, February 26th, $182. I'm going to continue. So this is showing the contract price, but you have to multiply it by 100 because one contract gives you the right to buy 100 shares. So if I click one and a price of 180, so what happens is on top of that,
So how do you pick that number?
so this is the number telling me over here. The price is $1.82 per share, but you to buy the right to buy one share is $1.82 at
So
this
you would
price
type
on Friday.
182. So you type in 182 up there.
Yeah, and then because you get one contract allows you to buy 100 shares, and you can only buy a contract. You have to buy the right to buy 100 shares. You can't
So
buy
you
just
can so you can put in whatever number you want in that, and it'll adjust accordingly. Whatever
yeah,
that
and this is
strike
a limit.
price
This is
is.
a this is not this is the limit. So if this is selling at 180, but I sometimes do 170. And let's say the contract price goes down to 170, it'll trigger. And I
So
can
does
also
that
say
basically mean that you're realistically looking at a strike price between 6 and 6.5?
so. Yeah, I'm trying to say by this Friday, or by sorry, for February 26th, I think this stock is going to be above $6.
I
And that
see.
way I'll be in the money. I honestly think it should be higher, much higher than $6 because I also pay for the contract, right? Which we'll go in detail in a minute. But that's the other aspects of it.
But what
Uh,
exactly? So it shows on their limit price 1.73 to 1.9. So
so
what
this is
is
the
that?
current this is the current range right now. This is what it's trading at. Because these things are really volatile, the range right now is between 1.73 and 1.9 in the past 1 or 2 hours or something. It's been
So what do
jumping
you
between these two
choose?
numbers. So it depends what you want. If you want, you can go for a lower number and $1.75, or you can go for a higher number. But let's say if you really want to buy this, are you going to risk putting a lower number? And let's say it doesn't close, let's say it doesn't execute,
Oh, so the
because
closer you put it to the upper range, the more likely it'll execute.
yeah, if you try to sell, a stock for like double its price, it's going to execute, right? But if you try to sell it for half its, or if you try to buy it for half its price, you know what I mean? Sorry, I
Yeah,
reversed. But if you try to buy something for half its price, it's probably not going to happen. It won't
yeah,
execute. So,
yep.
I'm going to put. Let's say I really want the stock. I'm going to put 190. It's showing $1.82. I can put
You mean
1.9.
1.9? Yeah.
1.9 or 1.85. On top of that, you have to go in increments of 5 cents. You cannot buy $1.82 or $1.83. I put in $1.85. So I'm going to click review. And it tells you right there, you're paying $185 for the right to buy 100 shares of AMC for $6 a share by February 26th. If AMC shares aren't $6 or higher on February 26th, this option will expire worthless. And a bit of more backstory options, a bit of more concepts. You're pretty much saying it's a coupon. This contracts can be looked at coupon, and it's up for the price of the stock to determine if the coupon has any value or not. Now, if you go to a store and the coupon says, you can buy this bread for $1 and the price of bread is $2, then you have a good deal, right?
Yeah.
Let's say the price of bread is 50 cents. You're like, well, I don't need this coupon. And that's exactly what options are.
You just throw it away.
Exactly. You just buy the bread without the coupon, and that coupon is worth no money. So you are buying a coupon, and that's the gamble. Is it going to have any value or not? And this is for buys and if you're buying a call, and for selling puts and everything, all these other combinations, we can get into that another time. But this is a very simple, the way I prefer best, because whatever you invest is what you lose. You don't lose more than 185. And other ways are kind of like shorting the stock. If the stock shoots up, you may lose a lot more.
And it seems like the returns are exponential the more risky you go, right? Because the more risky the investment is, the smaller the contract price is going to be. But also, if it happens, the much more money you get.
Yeah, it's just straight gambling. It's just, again, nobody knew the likelihood of AMC to go to $8 or not $9 by Friday, but it did. And it went to $8 after hours, and it was at $4 or $5 during the day, and it went to $9 after hours. And now this is in the money. Someone who probably bought this for pennies, it's going to shoot up. It's going to make 600-700%. Imagine if you put $1,000 on here. You made $6,000, $5,000-6,000 in a matter of a day or two. And my account, you can see that what's it called? You can see if you look at AMC, you scroll down over here, you can see that I made a call. Actually, it does not show it, but is this the one I bought? No, I don't think so. So once in the morning, once it fills, it'll show up on your page on AMC. You can also click it down and open it up, and it'll show you your order. So that's essentially options in a nutshell. Any other questions?
Nope, I think that about covers it.
All right, sounds good. If you have any other questions, hit us up, comment below, and if you need another video and more detail explaining it, let us know. We'll be happy to make you one. Have a good one, guys. Bye.